Global shares slipped in September by 1.1%. And this was largely driven by the stronger Australian dollar performance, with the Australian dollar showing particular strength against both the American dollar and the British pound. In local currency terms, actually global shares rose by 0.4%, which is a very mild gain. Concerns over the European banking system and the prospect of higher US interest rates constrained global share markets. Essentially, American shares drifted sideways in September. There was a moderation in job gains, as well as the business surveys, ahead of November's presidential election. The Federal Reserve decided to keep interest rates on hold, noting that although the case had strengthened for higher US interest rates, there was time to wait. European shares edged lower. There were concerns about the European banking system, yet the economic data was solid in Europe, with some positive business surveys. Australian shares made a mild gain of 0.5%. Higher coal and oil prices helped the Australian resources shares. There was also some positive employment data, with the unemployment rate actually edging lower to 5.6%. Global government bond yields were mixed. European bond yields edged lower, given those concerns about the health of the European banking system. However, American bond yields actually moved slightly higher, given the higher oil prices and the prospect of higher US interest rates at the end of this year. The key factors driving global markets was the prospect of higher US interest rates, as well as these concerns about the health of the European banking system. The American economy recorded mixed economic data. There was some moderation in job gains and the business surveys, which may reflect some caution ahead of November's presidential election. Accordingly, the Federal Reserve decided to keep interest rates on hold in September. However, the Fed did note there was a strengthened case for higher interest rates by the end of this year. European business surveys are solid, which is very encouraging. However, European inflation pressures at only 0.4% annual suggest there is further stimulus measures likely from the European Central Bank. For Britain, there was some encouraging lift in both business and consumer confidence, which indicates that Britain's economy is quite resilient after the Brexit vote. China's economic activity was both solid and stable. Industrial production is growing at a 6% annual pace, while retail sales maintained their robust plus 10% annual growth pace. Emerging markets provided positive signals. India's inflation rate moderated to 5%, which indicates that the central bank has scope to cut interest rates. Brazil's inflation has also moderated, although their economy still remains in recession. Hopefully, Brazil will get an opportunity to cut interest rates over coming months. For the Australian market, there were positive signals in terms of the rise in commodity prices. As well, Australia's unemployment rate edged lower to 5.6%, which indicates a solid labour market. The Reserve Bank Governor made some positive statements about the transition after the mining boom, noting that the Australian economy is doing reasonably well. The NAB Business Survey, as well as the Consumer Sentiment Survey, were also positive, which is particularly encouraging.